Hi, my name is Albert, and today we are coming to Torbjørn. He is the CEO of K33. How are you today? How are you feeling? What the crypto vibe like for you right now?
So actually, I'm feeling great, and the crypto vibe is pretty good. I mean, the market is somewhat turbulent still. Trump is doing what he can to shake the market, but Bitcoin in particular is really holding up.
How do you usually explain what you do at K33 to someone outside the space?
Well, we make it easy for people to buy, sell, and store cryptocurrency without worry. That's what we do.
And what made you write your master, if we go back about and talk about how you started with the crypto, and what made you write a master thesis on Bitcoin back in 2014?
So I had this deep fascination of the question, what is money? In mainstream economics, money is just like this neutral thing. You need to have the right amount of it, like oil in the machinery, but it's not viewed as something very interesting. But in heterodox schools of thought in economics, money is seen as a reflection of society, of power, an enabler of social dynamics. And I was very fascinated about those type of questions and really poking into what is money. And then a friend of mine pitched Bitcoin. And I thought, well, this sounds stupid. But unlike all of the other economists that have tried to find the origins of money, they tried to look back 5,000 years, 50,000 years, kind of archaeological diggings. With Bitcoin, you had this new phenomenon that was emerging in real time and challenging the schools of thought around the question, what is money? Because it was not backed by a government and was clearly not a good that you could consume. It didn't have any use value, yet it had obtained an exchange value. So my interest for money made me write my thesis on basically what is money, but with Bitcoin as the case study, if you like. And then I fell into the rabbit hole, discovered this Alice in Wonderland world where, well, from afar, a hole doesn't look too big, but when you start digging, you never dig your way out of a hole. So I've been there ever since.
So actually you start your financial career from the crypto, you would say. If there would be no Bitcoin or something, you would be working in the bank or in some financial institution.
Actually, I was applying for a job position at the Norwegian Central Bank after I finished my thesis. And I came second to the guy who's now a part of the team working on central bank digital currency. So maybe if the odds had been a tiny bit different, I would have ended up on the central banking side rather than the Bitcoin side. Who knows? But yes, but money and also the possibility of using it in more equitable ways was always my interest and what made Bitcoin very interesting to me. I especially looked at cross-border payments, how those could become faster and cheaper by leveraging Bitcoin as a payment rail.
So back to the question, what actual money for you?
So money is highly dependent on social situation. So, I mean, a lot of economists will tell you that money is unit of account, store of value, medium of exchange. But they don't talk about for whom and when. The Norwegian kroner is obviously a unit of account and a medium of exchange within Norway. But try to bring Norwegian kroner anywhere else in the world and you can't buy anything. With Bitcoin, you can actually buy from a lot more places internationally than you can with the Norwegian kroner.
So actually it's the future, we would say, yeah? In the future will be one currency probably.
So some people think that. I don't think so. What I discovered as a part of my master thesis was that the linear view of money and the money evolution is deeply flawed. And the story mainly goes like it started with barter, then barter was inefficient, so we started using some commodities like cows or something, or furs. Then gold turned out to be more efficient, and then we put the gold in vaults of banks and took paper notes that could circulate even easier. Then the paper notes went digital in the form of banking cards, and now we have crypto as the end state. It's a nice story, but it's just a story. What I discovered, and it's back to the social relationship with money, is that different monies work in different social relations. So it's not a linear trend. It's a question of what interaction, like what type of relationship are you trying to use money for transactions in. So between countries when you don't have trust, historically, you had to rely on a commodity money. And Bitcoin is a digital commodity money. It's a substitute for trust. When you have trust, you don't even need money at all. Within a family or within a firm, you don't use money, you use memory. Within a value chain, you can use trade credit and it will trade at face value. But you can't take the trade credit from one value chain and use it elsewhere. Banks, on the other hand, are institutions that have credit from a lot of different individuals and companies, and they use that to back their own credit that is then circulating in a wider social arrangement. But it's still a credit, so it requires the rule of law to be valuable. You can't easily take a credit money and move it across jurisdiction due to the kind of legal nature of a claim. So that's why you need commodity money, like gold historically. And Bitcoin should be seen as a digital commodity money, a perfect substitute for lack of trust. A lot of people will say that money requires trust. I think it's actually the other way around, that money is a substitute for trust, which means that you will have credit money, you will probably have some fiat monies, and you'll have Bitcoin and digital assets all living side by side and working in different social relations.
Do you believe that Bitcoin will be the gold of our future?
Yes. So I think both that gold will become way more important again. We've had a unique period where the dollar without the gold backing has been the world reserve currency. I think that period of the world is behind us. The dollar has become weaponized and it's over-indebted.
Especially
with Trump showing his willingness to really use the dollar as a weapon, it really sends a clear signal to the whole world that you should try to diversify away from dollars. The problem is that you don't want Chinese yen or euro or some other nation state money. You want a neutral alternative. Historically, that has been gold. I think gold will continue to be important, but while gold has some 1,000 years of history, it's hard to move around. It's inconvenient. Bitcoin, on the other hand, is fully digital, is kind of politically neutral. It has way shorter history than gold, but it's way more convenient. And I think Bitcoin will become the gold of the future. And that gold will become more important in the future we are heading towards.
Back to the question about the central bank. You have worked with the central bank and Minister of Finance. Why did that experience teach you about traditional finance?
So I've done a lot of consulting on blockchain and cryptocurrency. Every hype cycle, everyone from private sector to public sector want to know about this technology. Then the market crashes and it goes silent again. I think a key learning during that phase has been that this is an evolutionary phenomenon. All of these creationistic approaches and ideas of like distributed ledger technology, all of the consortiums, all of the top-down, oh, wouldn't it be great if we could get rid of the crypto part and have this blockchain part? None of those projects have worked, right? So I think a lot of these big institutions have a false belief in what they can make happen by making a decision in a board and kind of top-down, almost willing it into existence. Whereas the reality that these institutions as well are slowly discovering is that they have to tap into the open part of the crypto ecosystem. They have to use the public blockchains. They have to interact with Bitcoin. They have to interact with Ethereum. They can't just build their own side systems.
Yeah, they try to be conservative in some way, but the time shows that they need to use the crypto, like big institutions, like financial institutions, like a bank and...
Yeah, and take Norges Bank. When they are piloting a CBDC on Ethereum and exploring that possibility, Norges Bank or someone on their behalf have to pay the transaction fee in Ether. You can't use the public blockchains without paying the transaction fee in the native token. And you don't get the benefit of a blockchain without using the public blockchains, because there's nothing in the technology that is decentralized in itself. It's the actual networks that are decentralized. And without decentralization, you don't get the tamper-proof part, you don't get the immutability, you don't get all of these other characteristics you really want. Then you can just have a database.
What was actually the origin vision when you founded Arcane Crypto in 2018?
It was actually founded as an investment company. And we wanted to invest in different early stage businesses, building out financial services related to cryptocurrency. So when we looked at the market, it looked extremely fragmented, very kind of specialized roles for different companies. And then when you look at traditional finance, you see that it's much more consolidated. And our hypothesis was that we would see a lot of consolidation also in the crypto space. We also wanted to hedge our bets in a way. We didn't know precisely what would succeed and not. It was still very early. So we built a portfolio of exchange services, trading services, market research, asset management, tried some other initiatives, and then some initiatives we sold off, some we shut down, and then we consolidated the best parts into what is today known as K33.
What personally keeps you passionate about Web3 after all these years?
So I think I'm most passionate about Bitcoin when I speak about my passion, and then the broader public blockchain infrastructure. Web3 is a term that's used very widely, but I'm more narrow in my passion. And I think what keeps me passionate is my curiosity, because Bitcoin is still very niche. It's still very early, yet it's on a trajectory where it can truly change the global power dynamics. It can change how geopolitical forces are kind of measured against each other. We're not there. It's not the world reserve currency yet, but I think it can become that. And being a part of such a journey, seeing it play out in real life is just super fascinating. It makes me curious. I want to see where this will end up. And I keep telling people that it's building a business in K33 and being a part of Bitcoin are the two things, only things in life that makes me want to jump 5 or 10 years into the future. For all my other parts of my life, I want time to kind of freeze now or move backwards even. I don't have a rush. But to see how kind of K33 succeeds and see how Bitcoin succeeds, that is what keeps me personally
It's
engaged.
in somehow like exploring the space, yeah?
Yeah, it's the exploration. It's and I think it's something deeply human.
And we are explorers actually, and the humans are explorers. They want to know more and more.
We keep pushing frontiers, right? And we want understanding almost for the sake of it. And it's something that drives us, and at least that's driving me. It's also the other part, which is that I hope Bitcoin can enable a more open and permissionless access to financial services. There's some examples of that. There's a lot of things that can hinder that. I don't naively believe that Bitcoin will fix everything and we will have like an equitable society on a Bitcoin standard. But it's also a part of me that really hopes that it can drive more equity and be a stabilizing or force in society, an outside alternative to the system.
What exactly is a research-led crypto brokerage? How does K33 differ from typical exchanges?
So, as I said, we're here to give or offer very free buying, selling, and storage of cryptocurrencies. The difference is that with K33, you have no hidden costs, so absolute full transparency. There's actually no fees. Our revenue is a part of the bid-ask spread, so what you see is what you get. There's no withdrawal fees, there's no withdrawal limits, much more transparency. The other is that you get personal support. We work with fewer and larger clients, but we also view them much more as a partner. So as a corporate, when you onboard to K33, you'll get an account manager that will assist you with the onboarding process, that will sit on your side of the table, helping you interact with the kind of compliance requirements. This is very different to the big exchanges where you have you get all the forms sent at you. There's a support function that is outsourced, and you get stuck in Kafkaesque type of processes. And lastly, we pride ourselves in offering deep liquidity and superior pricing. We don't fleece our clients. There's a lot of services out there that are way too expensive. And we don't think that will be viable long term, and therefore work really hard to optimize such that our clients can benefit from not only the personal support, increased transparency, but also superior pricing.
So actually this is a unique services that K33 can offer today, yeah?
Yes, and how we can be able to do so is by not serving small retail. So it's not that we have anything against small retail users, but we can't have a platform with hundreds and thousands or millions of users and offer personalized support.
So you're like working like VIPs, or you're working like with the corporates? Like
with corporates, high net worth individuals, and with family offices, with those who trade in larger volume. So in many ways, in finance, there are two ways to scale a business. One is to have a lot of users. The other is to have a lot of zeros behind the numbers that people are trading with. And we are going to scale with the zeros. We're going to have few and very powerful users. And as an example, we're already working with several Nordic brokers. So those Nordic brokers have tens and thousands and hundreds of thousands of clients of their own. But then we only face one client. They optimize their front end for local bank ID interaction, make it like rounded corners, nice and purple, supporting the local language, etc. And then we offer all of the hedging services to that platform.
Do you have any like minimum portfolio that you can be a client for K33?
So not at the moment, but you have to expect to trade for more than $25,000 a year. So it's not a very high bar.
Yeah,
but we see that that threshold has been very effective.
Yeah.
And we're probably going to increase that over time. But we kind of, as I said, it's not that we don't want small people, but the challenge is that
you don't have a possibility to serve everyone.
Exactly, and it's also in what you prioritize building, right? So if we were building K33 to be a service with millions of end users directly on the platform, we would invest in a very different type of CRM system. We would invest in very different automation systems. Knowing that we will only have, say, 1,000 monthly active clients, and then say a 10,000 base or 20,000 total, enables us to say what we're not going to build because we can handle it manually and then prioritize the resources elsewhere. It's also a part of what enables us to really offer superior pricing.
Is there any priority for the CRM systems that you are using, or just ordinary CRM systems that are globally known?
Oh no! So we use kind of from the big providers, but it's not like you install it or like you sign up and then it's kind of ready. You have to run these systems and everything down to compliance. For instance, we take higher risk clients and we figure out how we can get the documentation we need. On most platforms, you'll be faced with a form, and if you don't fit that form, well, you're not going to be accepted. Like it's like either you
yes or no. Just.
And it's very much like a one-size-fits-all approach. We have a tailored approach. So we work with a lot of people who've made trading gains from NFT trading. That's really hard to document for a normal exchange onboarding. With us, we work with the client, figured out how can we kind of find proof of this trading happening. And then by working with the client, been able to find sufficient documentation and therefore also accept the funds.
What lessons did you learn from building a diversified portfolio of crypto products at Arcane?
Focus is everything. If I were to start over from scratch again, I would not have been that broad. The idea was to be broad, to call it hedge our bets, to have like a portfolio approach and be like an investment company. But we did not take minority stakes. We took kind of majority stakes or large stakes, even sometimes like fully bootstrap these business ideas ourselves. And that meant that my time was spread too thin over too many projects. Almost killed us. We learned our lesson. We sharpened the focus. We merged the best parts. We sold and got rid of the other parts. And now we have a way stronger focus. And the reason why this is needed is because all of the things that you don't think of, like accounting, auditing, storing of data, like all of these nitty-gritty things.
This is very important. We've been talking
actually really hard to get right, and you can't make up like all of the things that like everything that can go wrong will go wrong. And when you're building a business from scratch, there's a lot of stuff you'll get wrong on the first attempt. So you really need to keep sharper focus, and when you think you've sharpened your focus enough, you can sharpen it even further.
So you just try to take broader and maybe to get more income or more investment in some way, but there was too much to do in the way.
It becomes a little bit like running in many directions, doesn't get you very far. The challenge, however, if you say like, I'm only going to walk in this direction, well, if that happened to be the right direction from the start, then you're lucky.
You don't know this is the right
But if it's not right,
direction,
you'll just march over the cliff and die. Yeah. So if you're too locked in from the start and not open for learnings and then pivoting, you'll go bust. if you're pivoting too much, you'll not get anywhere. So it's all about finding that balance. But I like this analogy of pushing on a flywheel. And then at first, like, it doesn't move. But if you push over and over and over in the same direction, and some pushes will be hard and some pushes will be soft, over time you'll build up a massive momentum. And from the outside, it'll look like you suddenly have this like takeoff moment, and people will think that it happened overnight.
Yeah.
Whereas in truth, what happened was that over and over, you kind of ironed out all of the kinks pushing in the same direction. You solved the accounting, you solved the auditing, you solved the storage of data, you solved all of the, like, how to do sales, how to do marketing, how to onboard people, how to fire people, all of these nitty-gritty things.
I just was hitting the same point all the time.
Yeah, and pushing in the same direction over time. So, I mean, I learned a lot from having that portfolio. But the main learning was, if you want a portfolio approach, make sure you're hands-off. Make sure you take 5% stakes, maximum 10% stakes, and really have a broad portfolio. The idea of starting out with this consolidated approach, because that's what you see in other industries, that's getting the wrong order of things. You have to get the core functioning and then build from there. And that's what we're doing with K33.
What's your view on DeFi?
So DeFi is very interesting. And especially as an economist, it's been really cool to see the development of services like MiCA, or now Spark, which is actually taking banking and bringing it fully on-chain. So there's a lot of interesting primitives in DeFi. But when we'll look at how DeFi is used, it's basically a competition for the casino industry, not for traditional banking yet. It's a way to get more leverage, to list more speculative coins without the kind of disclosure requirements, without the type of guarantees you would need to be able to list on a proper exchange. So there's a large element of regulatory arbitrage. Today, there's probably no one using DeFi because of any censorship resistance for the sake of kind of more democratic access to finance. And it's probably only used to get more leverage, more listing of coins, which is interesting because it's the first step that can help develop this part of the industry, but it's still very, very early. I mean, even Bitcoin is still early. So I think we need another decade before DeFi truly becomes more meaningful in society.
So actually it's a competition or synergy?
For whom? I think it's, so far as I said, a competition for gambling, because I think I truly mean this, like, as a substitute for sports betting, is crypto token betting, it's meme coin trading, and then leveraged yield farming. I mean, the yield farming, there's nothing value generating in society from that. That's a zero-sum game with bubble dynamics around it. A lot of the cryptography that's being developed, a lot of the experience for programmable finances that is being developed, that will be usable later on. And I think that is a synergy for the financial industry as a whole, probably a competition for some players. Because what it does is that it enables new, more crypto-friendly financial institutions to leapfrog or bypass the traditional banks they had to rely on in the past.
What are the biggest gaps in crypto infrastructure right now?
I think it's still actually on the on-ramping and off-ramp. So in many ways, that's what we do at K33, right? We enable you to go from your local currency. We support 7 different fiat currencies for deposit, trading, and withdrawal. So it's like getting into a stable coin or Bitcoin or like your crypto asset and getting out again. That's the hardest part. Because when you're inside, you can actually move it around pretty freely. Stable coins are already being used as payment instruments outside of crypto and really getting traction there. Bitcoin is massively being used as a savings tool and a cross-border payment mechanism and like a value transfer mechanism for larger transfers. DeFi, as I said, is still too early. And then the main blocker is still how to get in and out, because there's no way today you can live only within unless you're highly dedicated.
Can you tell us more about the K33 Vintage Quality Index?
So actually, that is not live anymore. So, but it was a.
So actually, it's finished.
Yeah, that's finished. So it was what we did there was that we developed a tailored cryptocurrency index of tokens that was a part of the top 30 list, but then took out those that had some poor qualities to them. Didn't mean that all of the coins included had strong qualities, but it meant that we kind of did a filtering. So it was a smart beta, as it's called. You take like a naive index and then you apply a systematic approach to filtering out the lower quality.
Interesting. Let's talk about maybe philosophy and decentralization. What does actual decentralization means for you?
So I think that's a term that's been misused a lot. I think decentralization means that it's truly immutable, or like that it's unreversible when you do transactions. That no entity can control the rule set or censor, so censorship resistance, and permissionless and open access are kind of the key characteristics of decentralization to me. If someone can censor it, if transactions can be reverted, or if people can be blocked from participating, then it's not decentralized to me. So, but you could also flip it and say that decentralization is what's necessary for these conditions or these features to be realized. So it's like this decentralization doesn't have a value in itself. It only has a value for the type of features it can enable. And I think here it's I think that is very important to think about when we look then at the whole blockchain and Web3 ecosystem, because there's very few use cases that require decentralization. Bitcoin as a potential new world reserve currency, a new form of money, truly needs decentralization. It truly needs to be immutable, censorship resistant, and permissionless access. If we look at shitcoin trading, that doesn't need decentralization. It just needs to be decentralized enough to confuse regulators. Because what you do there is actually take coins that you otherwise could list on Coinbase or Binance. But the only reason these platforms don't do it is because they have some regulatory oversight. They have some standards to meet in terms of documentations, etc. So they get listed in the DeFi side, like in the on the public blockchains. Similarly, with some of the stablecoin use cases, etc., it doesn't really need to be decentralized. I mean, the issuer is centralized at the end of the day. It just needs to be decentralized enough to confuse the regulator. So it's about regulatory arbitrage in a way. Mm-hmm. And then lastly, the last useful part of the blockchains is composability, interoperability. And that has nothing to do with decentralization. That has everything to do with shared standards that the different protocols and different smart contracts can communicate with each other. This could have been developed on centralized databases, and it would actually have been more efficient. But it's really hard to develop such standards and get people to agree on a standard. It happened to evolve on the public blockchains. So a little bit like how the internet wasn't necessary to do TV, it wasn't necessary to do radio, to the telephone. We had networks for all of these types of communication. But now, all of these types of communication actually is routed via internet. It wasn't necessary. At the start, it was actually worse to send email than it was to send a fax.
Yeah.
But over time, internet became this general infrastructure for information. And the interoperability, the fact that you didn't have to build all of the services yourself, was a key driver of that. I think we're seeing the same in the crypto space, where if I'm an artist and I create some paintings and I want to issue a token, that is a centralized thing. I'm the one certifying that. I could certify that on a wallet set up on a centralized database. There's no value add from the blockchain, apart from the fact that if I issue it as an ERC token, then suddenly that token is interoperable with all of the other software out there, and I don't have to build all of that software. So then scale it back to decentralization. Bitcoin needs decentralization. Regulatory arbitrage just needs faking decentralization, like the Tron blockchain or Solana. And then interoperability doesn't need decentralization at all. It just needs the shared standards.
Does crypto really solve the trust problem in finance?
What's the trust problem? I mean, finance is built on trust. I mean, there's more money in traditional finance than outside because people do trust the financial institutions. So I don't think there's a trust problem. I think there's a problem of censorship. There's a problem that the bank blocks you from using your money the way you want to use it. That if you can't answer their questions, they freeze your account. Or if the US want to sanction you, rightfully or wrongfully, they can. So I think the trust problem is not in finance, but in governments controlling finance and using finance as an extension of their control powers. And I think the distrust comes from being blocked, being denied an account, being denied access to doing the transactions you want. And we saw this early on in crypto when it was used on the darknet. It was not that you didn't trust your bank. It had nothing to do with trust. It was just that the bank wouldn't let you. So I think it's much more about access and permission or permissionlessness.
Yeah, same thing that bank can do right now. If you don't trust it, they can block you.
They can block
anything,
you, and they will block you.
If they get something from the high instance, for example, from high entity, they can just block you if there will be no legal things that you are doing with a bank account. The same thing that can happen with the crypto.
But I think then it isn't that you don't trust. It's just that you don't want to be dependent on. You want self-sovereignty, and Bitcoin can actually give you self-sovereignty. You can actually hold your own funds. Or
a bit more independent in some way.
It's way more independent. And what's interesting is that you don't have to choose. It doesn't have to be binary. It doesn't have to be like you either do the self-custody or you fully rely on someone else. You can do multi-sig. Or you can choose the player you want to rely on. But you can still quickly move between players. If you hold stocks in a brokerage account as a normal individual, you can't send those stocks to another broker. You first have to sell, withdraw the money, and then redeposit the money and buy the stocks. But with Bitcoin, if you stop trusting K33, you can withdraw right away. Or if you stop trusting your other partner, you can withdraw and deposit to K33. If you live in one country and the country collapses, you can bring the Bitcoin with you in your head, remembering a passphrase. As you settle down in a new country, then you can decide if you want to continue to do self-custody or then move funds into a local exchange for the kind of safekeeping and avoiding kind of the risk of personal attacks, etc. So you have much more flexibility, and I think the flexibility part is important.
Are there parts of traditional finance you'd like to bring into crypto?
I like to bring?
Yeah.
Oh, definitely. So,
for
as
example,
I said, in K33, we're working with high net worth individuals, family offices, and corporates.
Mm-hmm.
Long term, I'm certain that every bank and financial institution will have a crypto offering. And I'm also certain that none of them will build it fully in-house. They will all look for different types of partnerships.
Like outsource. So maybe the bank can buy K33.
Yes. So they can either buy K33
or just can
or
be cooperate
in partnership.
With,
we can enable banks to offer the K33 products to their client base, or other productizations they want. So we're already now working with an investment company operating with stock investment and index investments. And we are now exploring a way for them to also offer crypto to their clients built on top of K33. So they're an order transmitter and have a MiFID too, like a securities license to doing that for securities, and we're replicating that model for crypto. And it's a no-brainer. If you're a traditional broker, you can add a new revenue stream where you can enable your clients to trade 24/7. You can make new products where you take an interest account, which is the most boring thing in the world, and you can let the interest accrue in Bitcoin. Suddenly it's differentiated. You can use it as a customer acquisition tool. It's 24/7. I mean, traditional finance is closed in the weekend. You don't make any margins during the weekend apart from the interest spreads. So I think all of the, especially first from the transaction-based part of those that make a margin on transactions, you'll see crypto coming there first, and then over time also even moving into banks on lending products and interest margins as well. So K33 is very much preparing for a future where we become the preferred partner for banks and other financial institutions offering this.
In your opinion, what's the most meaningful real-world impact crypto has made so far?
In Europe?
Let's say in Europe and maybe in the world.
I think what's difficult there is, like you say, real world. And I think it's a real world impact when people can hold their savings in Bitcoin. It's a real world impact when my Bitcoin savings has appreciated. Because that's a reshuffling of wealth. Is it positive? I think it's positive. It's not like I've stolen someone's money and I have more wealth, but did it add more food or more housing or more healthcare? No. I mean, when the Ukrainian war broke out, Ukraine was one of the countries in the world with the highest ownership rates of cryptocurrency. And those who fled Ukraine and had cryptocurrency could bring money with them. And whereas those who had it in the bank couldn't. So those people could then sell in Poland and pay for food and clothes to their family. So I think we don't ask what is the most real world impact we've had from money. Like it's money is both kind of dirty, is helping your enemy, and it's like it's neutral.
It can do good things or bad things.
Good things, bad things. I mean, it's being used for drugs.
Yeah.
But like that's not the main use case. That's a real world impact, a negative one, many would say. It's being used to do remittances so that more money can reach family in countries in South. That's a meaningful impact. So I think this false dichotomy between like real world, non-real world is kind of blurring, and it's a blurring lens to look at it.
And coming back to Norway, is Norway ready for mass crypto adoption, or will that happen elsewhere first? Or so Norway, maybe it's happening actually?
I think it's already happening as an investment object, right? I mean, 12% of the Norwegian population own cryptocurrency. That's early majority, or like that's approaching early majority. Like the first moves have been here, and like it depends on how far we're going to go, but it looks like we are approaching the steep part of the S-curve. So I think mass adoption as an investment technology is what comes next. Use for payments, that's going to be parts of the export industry that operates globally, and that increasingly finds itself blocked because payments are becoming more and more politicized and more difficult in different payment corridors.
And also the tax, this is also.
So I think the stable coins and Bitcoin will become more important for things like shipping, seafood, those kind of exporters and importers, probably oil and gas as well. I mean, we already see mining mixing with the energy sector, both in Norway and also globally, and especially related to oil and gas extraction, harvesting natural gas that would otherwise be flared or ventilated as an energy source, actually reducing the CO2 emission from carbon extraction. So
maybe Equinor is planning to.
They have had a project.
They have a project with crypto already.
Yes, through a partnership where instead of flaring the gas is then used to produce electricity and then mine Bitcoin with electricity. And you get better economy in such a project. We can also then finance stronger filtering and cleaning of the emissions. And methane, natural gas, it's very harmful greenhouse gas. When you burn it, it becomes less harmful as it becomes CO2. The challenge is that, of course, it would be great if you could take that gas and transport it, but you don't have the infrastructure. You have like a lot of bottlenecks, and mining always find energy trapped behind the bottlenecks, the energy that is otherwise wasted.
What are the biggest adoption barriers Web3 still faces?
I think it's still familiarization. A lot of people are curious. They want some exposure. They would like to buy and hold, maybe use, but they don't know how. They don't know if they're a company. They don't know how to do the accounting. They don't know which platform to trust. They don't know where to go. They don't know how to on-ramp and off-ramp. And since they don't know,
they say just wait, we can do it a bit later, yeah?
So and that's fine, because it's those who care the most, either because they have the strongest need or the most exploratory mind, that moves first. And by moving first, they kind of make the road easier and easier for those who follow. And that's why I think we are approaching the steep part of the S-curve. Because having gone from 0 to 12% of the population owning cryptocurrency, and in K33 we see a lot of companies, Norwegian companies, buying and holding Bitcoin as a treasury asset. That means that it's going to be an order of magnitude easier for those next 12 percentage points from 12 to 24. So they are going to come way faster because the path has already been cleared. And that's why people underestimate these adoption curves. Because they see the slow adoption at the start, they say, oh, it's been here more than a decade, like almost a decade and a half. And like nothing is happening, and yeah, I could buy it, and maybe it's not darknet money mainly anymore, but like, what is this casino thing anyway? And then suddenly, it looks from outside that it's sudden, but it's like this flywheel effect where it's become so easy, become so integrated. And we're just a few years away from every bank having this as a part of their service offering. And when they do, you don't even need to open a new account. You don't even need to go to K33 and open an account with us. You can trade on K33 through your broker or bank that you already have.
How is actual K33 helping to make crypto usable, as we say, in real life?
Well, we think that insight is a key part of making something usable. So we are producing kind of research on the sector, on the development, on use cases, and the market to make the whole space more understandable and more approachable so that people can build knowledge. And so that's the one side. The other side is, of course, that we enable the simple and safe, worry-free buying, selling, and storing. And the on-ramping and off-ramping is the biggest hurdle, and that's what we really help to bring down. And you don't have to interact with a bot. You don't have to interact with an outsourced support team that gives you a ticket and comes back 2 months later. You can interact with a real person that will answer you on the day or the day after. You can call us, you can come to the office, and actually let us hold your hand while you enter this crazy space that is crypto.
How do you compare EU, Norwegian crypto regulation to the US or Asia?
So I think EU was on a good trajectory and always just following the EU, starting with MiCA. How it looks right now is that MiCA is going to push innovation out of Europe. It's great for companies like K33 who will obtain the license, who are well established and can pull up the ladder, basically increasing the barriers to entry and reducing competition. But it's not great for the EU as a region, and it means that we're going to lose out on the future big parts of the evolution of this industry. It's too bureaucratic and too much documentation that is needed. The East Asian regulation, I don't know too much in detail. I know Singapore has been kind of more trying to build out the regulation to attract services, and it's different in different jurisdictions. I think the US had a very early start in crypto that was very promising, and then they completely shot themselves in the foot, almost trying to block crypto, trying to unbank crypto, making it really hard to get regulatory clarity. You had the regulatory bodies, the CFTC and SEC, fighting between each other on who had jurisdiction. Is this a commodity or is it a security? That is now changing with Trump. Trump has made it very clear that the US will become crypto-friendly again. The SEC has removed a lot of their cases. I mean, it's great for the acceleration of the industry, perhaps moving a bit too far. I mean, there's a reason why you would need some type of investor protection. There's a lot of scamming and kind of misleading marketing happening that it would be good to avoid. But I think in the choice between a US hands-off approach and an EU good intention over bureaucracy approach, I would rather see the US approach. And I think the EU will have to reassess within a few years to reduce the regulatory burden, because the intention is good, the guiding principles make sense. The practicality of how it's implemented and how you need to document the documentation of the documentation and the documentation, that doesn't make sense in practice.
Does regulation in the Nordics help or hurt innovation?
The Nordics are just going to follow the EU, implement MiCA more or less as is. And MiCA definitely hurts innovation. And I think the Nordic regulators are positive to innovation. They are engaged and they don't want to hurt innovation, but it will, there's no way around it. It's just like the overhead that comes with regulation is just too much for small startups to bear.
And what's the one thing you would change in crypto regulation today?
I think conceptually it's built on the wrong idea. It's built on a desktop understanding of how you run a business, and it's built on the idea that if you just have a routine written down for everything, nothing bad will happen. I think instead, if it was tilted much more towards an outcome-based regulation, and I know it's hard, I know there's trade-offs, but like more like if a lot of money laundering goes through an organization and that's spotted, then you're in trouble. You can have it much more incentive-driven rather than rules-driven. So if you look at payments industry, on the AML side, it's rules-driven. They have to document for the sake of documentation. And they do AML, anti-money laundering, not to stop money laundering. They don't care. They do it to stop the regulator from asking questions. They just show, we've done this, we've asked this, here's our risk-based approach, and look how beautifully we tick all your boxes. When it comes to anti-fraud, they have a very different approach, because fraud is their loss. If they don't stop fraud, like card companies, they see it on the P&L. So when it comes to anti-fraud, they're very pragmatic. Yes, there are routines and there are policies and procedures, but those are driven by the desire of actually stopping the fraud. Whereas the AML is driven by the desire of shutting up the regulator and saying, like, and the auditor, and say, like, look, we're doing what you're asking. So the one change I want, and I know it's like a broad, but is to change it much more such that the incentives are more similar to what you see around anti-fraud, which is more self-motivated, and it's less of a bureaucracy thing. Because the challenge is, like, if it's not written, it's perceived as not having happened.
Yeah, so it's like it's a fraud. If you're not written this, if you're not documented this, so it means that it's like a fraud.
For anti-money laundering and the whole spectrum around it, like you have to. So the whole way it's built up is that you make a risk assessment. So you write down all of your types of risks, like all of your products, all your client types, and then you identify the inherent risk, and then you have a mitigating measure, and then you have a residual risk. And then you have routines and policies that are kind of those mitigating measures. And then you have routines for updating the routines and assessing the effectiveness. And then you have reviews of the routines and the logs. And then it all sounds very beautiful as a desktop exercise. If you've ever been on the inside of a business, if you've ever been running a business, you know that's not how it works. I mean, we are sending suspicious transaction reports to the FIU. And most of those, and especially those that FIU has been really happy about because they've been helpful, they're really going to help them fetch criminals, has been triggered by the human touch element, like the seeing of a pattern that couldn't be encodified in a routine, but that you can discover when you're hands-on and when you actually care about stopping. Most of those transactions we could have just kind of processed based on the routines that has been kind of accepted and okayed by regulators and advisors and God knows what. But in K33, we have a policy of actually, like not only being compliant so that we can check the boxes for the regulator, but actually stopping money laundering as well and wanting to do that. But it's the last part that should be taking the most time. And reality is that what takes the most time is the compliance for the sake of compliance.
Are we moving toward global standards or a fragmented regulatory map?
Definitely a fragmented regulatory map. And that's the cool thing, because Bitcoin and the crypto protocols, those are global standards. Those are globally interoperable. And then you get competition between jurisdictions.
Do you see any interesting intersection between AI and Web3?
Yes. So one thing that's very interesting is that there's a lot of parallels. So with the cryptocurrencies and kind of Web3, the open web, if you like, any individual has access to the same networks, the same capabilities as any institution. So when I store my Bitcoin, I use the same cryptography as BlackRock does. There's no difference. And when we see how AI is actually rolling out in society right now, it's very much the same. When I use ChatGPT or any of the other large language models, I use the same tool as some of the most influential institutions. And maybe they have something even more powerful they can use. But in the past, if you wanted to do heavy analysis or like anything AI-like, you have to have like massive resources at your hand. Now you have those available to you as an individual. So both Web3 and AI really empowers the individual. I mean, as a single person, you can now start a full business. You can have 10 people working for you in terms of AI assistance, and you have global payments with crypto and open services without even having a banking partner. Further, you do see projects that are kind of truly interlinking, because there's a lot of censorship of AI models. There are projects that are connecting crypto payments to having your model being run and building kind of censorship-free AI, so you can access more permissionless use of AI, where the government hasn't told what AI can be allowed to answer or not.
It's still not very regulated in some way.
AI is fairly unregulated. I mean, it's like crypto used to be. It's like, of course, there's a lot of background regulation and things that are illegal, but it's a very new field. And both fields challenge regulations very deeply, because the regulations we had from the past have been written for a world that was physical, with a lot of physical limitations for both movement of funds, creation of content, etc. And responsibilities and duties, etc., built around that. And both AI and Web3 kind of challenges that, because in a multi-sig, where the keys are held in different jurisdictions, where is custody? Under which jurisdiction are you obliged to do what? You can't do multi-sig of a gold bar, because the gold bar has to be physically in one place. And similar with AI, can you regulate what type of answers it can give? It generates them. Is the person who wrote the code responsible? Or is the person using the code responsible? Are you responsible for the question you asked, or what you did with the answer you got? And all of these are kind of very new fields. Governments do want to regulate it. I mean, it's in the very definition of our government is to kind of regulate what the individuals should do, like create standards and norms to homogenize how we interact. And then we see governments and regulations changing when technology changes sufficiently such that how we interact as humans change.
What upcoming infrastructure breakthroughs are you most excited about?
So I'm not sure if I mean, it's a lot of the scaling solutions, like the second layer technologies are very interesting, because they can make the blockchains more kind of scalable, cheaper to use, extend usability, functionality and features. But I think we are at the stage actually where the base is good enough. I'm not saying that it should kind of ossify and not evolve, but like it's good enough. And I think what I'm most excited about is not infrastructure breakthroughs, but rather user application breakthroughs. I think
like usability in some way.
Yes, and I think there's a ton of use cases that are not ready, that haven't taken off yet, but that doesn't need a new infrastructure. I think the infrastructure has come a far way, and I think what is lagging is the use case. And that's because the use cases requires figuring out boring things like tax reporting, accounting.
Yeah, in some way, if it's possible to make it much more easier. So you just press the button and everything makes it.
Yeah, but I think that's fine. I mean, that will make it very broadly accessible. But I mean, if you're not willing to use it unless you can click one button, you don't really care. If it's important to you, you find it out. I mean, I watched a TV series on Pluto TV. It's a free channel, and it's the worst app ever. Like it was so random how I had to navigate to find the latest episode. I had to start one episode, then wait for the commercial to load, then go to the more section. Then I had one view of some episodes. I then scrolled, and it didn't show which show. Scroll to the last one of those, then click view. Then, when I clicked the more, then I got the full list of episodes. I found that out because I really wanted to not watch all the episodes again. I really wanted to watch that series, and I didn't bother paying for a paid subscription. It didn't stop me because I had a strong want. If you need it to be on one click only, you don't need it. I mean, then it's not important to you. So if it's important, you find a way, unless there's a big friction. I think the big frictions are on all of the formalities and know-how, all of the accounting, all of the tax reporting, all of the hassle. A lot of people, and especially companies, will say, I would have loved to do this or just buy it if it hadn't been for all of like this black box of headache that I don't know how to deal with. And it's not hard. It's solvable. And we help clients in K33 work through those because we know the answers. But when you don't know the answers, it's a big black box for you. And that's the main blocker.
What does the crypto landscape look like in 2030 in your mind?
I think we don't speak too much about crypto as like or Web3 as this distinct thing. I mean, there will be some niche conferences, sure. But I mean, when I first started presenting on Bitcoin, everyone asked, how does it work? How does it work? Like for 10 years, I did presentations and I always had to talk about the public key cryptography and the private key and the public key and how its signature works. People asked because they thought they wanted to know. Truth was, they didn't care. They didn't even understand it. They just wanted to, they thought they wanted to understand it. Now we use our phones. We don't talk about internet companies. We don't talk about the internet economy. Like we talk about the economy. We talk about companies. And we're not going to talk about crypto companies or Web3 companies. We're going to talk about companies. And they're all going to use crypto and Web3 in some shape and form. And it's not going to be let's have a crypto strategy. Let's have a Web3 strategy. You don't have an internet strategy. Yeah. And it's going to be the same. It's going to be, I think, kind of a part of the infrastructure layer of society. And it's going to be like with the internet, but for handling of value.
If you were to write a new thesis on crypto today, what topic would you choose?
I think I would continue on the same topic, Bitcoin as money. I had a main focus back then on remittances and also like what is money. I think now I would have really dug into can Bitcoin become the new world reserve currency. My hypothesis is that it can, that it will evolve as the new reserve currency. But I would have loved to do a thesis kind of truly digging into that matter, looking at past reserve currency shifts, what are the signs to look for, what are the confirmation biases that I might be blinding me, what type of liquidity would Bitcoin need, how would such a trajectory look, and what are the alternatives. So Bitcoin as the new world reserve currency.
So you just go deeper in the same topic that you had before?
Yes, deeper and deeper. You know, it's a hole and you don't dig your way out of a hole.
What is one belief in crypto you disagree with?
That there are hundreds and thousands of cryptos. So I think it's important to be aware that Bitcoin is more than 60% of the whole market, even when you include stablecoins. So it's not a crypto market, it's a Bitcoin market. Bitcoin is by far the most important crypto asset. It's the only one that can become money, that can transform how we interact and use money and become like a reserve asset. Stablecoins are also very interesting, and don't get me wrong, there's a lot of interesting projects. But you should not be confused to think that there are hundreds and thousands of crypto assets. Yes, strictly speaking, there is. But you should focus 2/3 of your energy on Bitcoin.
Crypto is trading today is about 88,000
Bitcoin?
Bitcoin.
Yeah.
US dollars. What do you think what's the highest level of Bitcoin in maybe 5 or 10 years?
I think in 5 years, give or take a few years, is probably $1 million. That would take Bitcoin to a market capitalization similar to gold today, which would be around 4% of global wealth. I think that's a next step for Bitcoin. I think it will still be strange to me to see Bitcoin just plateauing there because it is much more than gold. It's programmable, borderless, digital money. But I think taking the role of digital gold is the next milestone, and I think that's more likely than Bitcoin going to zero.
Well, and what do you think were the best place to store your Bitcoin?
So for many
actually
years, I
cold.
stored my bitcoins in like in a hardware wallet, multi-sig setup myself.
So like,
And I faced
like a cold storage.
Yeah, like a special USB stick,
Yeah.
right? And then the big problem I had was that, what if I get hit by a bus? Okay, how should my family be able to access it? So if I made it very easy for my family to get access, like they had a backup phrase in one place, and they could go and find that if I got hit by a bus, that became a single point of failure.
Yeah.
Then if I made it very complicated, like I cut it in pieces or I made a multi-sig in different locations and time blocks, then the risk of them not getting access was really high. Then also by having self-custody, and as kind of the value increased, I got more and more worried about the wrench attack, like someone actually kidnapping me and starting to hit me with a wrench or kind of drill my knees or something.
Yeah.
And these things happen. So
these things happen. That's why you are just thinking about.
Yeah, I mean, it's happened in Sweden. It's happened. It's not happened in Norway, but it's happened to crypto people all over the world.
So you need to have
so
bodyguards.
What I did instead was that I moved my funds to K33 Vault. It's a special service where you get your own on-chain addresses for Bitcoin or other assets. So I can monitor in real time my wallet and know that my Bitcoin is sitting there and I can see it on the blockchain. I have then bespoke withdrawal rules, including that I have to show up in person with my passport before I can withdraw.
So like you find a solution for this, and this solution.
And I made it a product. So
you
first,
made a product in that K33.
Yes.
Yeah. How to save your Bitcoin in a safe way.
Yes. So for now, the withdrawal rules are rules, but like they're operationalized by us. So you set them, and then we follow those procedures. In the future, we're probably also going to have a layer of cryptographic rules. For instance, that you have to approve cryptographically, but you don't have all the keys.
How safe is it?
I sleep very well, to put it that way. So I have all my Bitcoins in K33 Vault, and I sleep very well. I think that's been building a business, and the failure to understand how important focus is, how really narrow you have to have your focus to be successful, and how you truly have to make something work well first before you expand. I think another thing that hasn't been a failure for me, but a learning for the industry, that sounds very cocky, I know, but it was that I was lucky enough to discover Bitcoin early, and I was always a bit puzzled by the shifting focus on these altcoins or like DLT, distributed ledger technology, and all of these narratives. And all of those initiatives, be it the Facebook Libra project or the R3 consortium with all of the big banks, all of those failed. And what has emerged as the dominant blockchain is Bitcoin. So both from the corporate side and from the crypto side, everyone dismissed Bitcoin over and over, cycle after cycle. Now it's this thing, now it's that thing, now it's AI coins, now it's this thing. And all of those initiatives, apart from stablecoins, fade away. But even when you compare with stablecoins, Bitcoin continues to reign king and come back stronger and stronger cycle after cycle. Bitcoin is the one constant in this space. And I think that's a key learning for many. I was lucky enough
to understand this early.
Or by chance. But there wasn't too much popularized takes when I started reading on this. So I dug deep and read up on consensus mechanisms, like and how they evolved from the 70s. And also with the economist view on this. To me, it's very clear that the network effects for money, those are very strong and very persistent. The network effects for a utility token, on the other hand, are much weaker. There are network effects, like how VHS won over Betamax. But then if it's utility driven and you get DVD, VHS doesn't win anymore. And then you get streaming, like Blu-ray in between, but like. So when it's utility driven, you keep switching standard. With money, you don't keep switching standard. With Ethereum, on the other hand, why wouldn't you switch to Solana if that is better for your shitcoin trading? Why wouldn't you shift to Tron if that's better for your stablecoin movement? Why wouldn't you switch to the next? So it's much more competitive and much weaker network effects.
Has sci-fi or Star Wars ever influenced your vision of finance?
It's a funny question. My holding company is called Munilinst, and the moons are actually a race or in the Star Wars universe, the banking class, and Munilindst is the main planet for the moons. They are tall, brainy, math-oriented people. So it didn't change my view on finance, but I got inspired to call my holding company, or name my holding company, after the moons.
So actually that was inspired by somehow by Star Wars, yeah?
Yes.
What do you enjoy outside of work that keeps you grounded?
Oh, I love hiking. I love bonfires. Every time I hike, I try to make a bonfire. Like, of course, not when it's not allowed in the summer, but I love, walking in the forest, swimming in lakes or the fjord. Yeah.
Being with nature.
Being outdoors.
And what's the biggest lesson you are taking with you into the next stage of your journey?
Always stay curious. Always stay humble. And it's much more important to listen to others and try to understand than to try to be heard. It's much more interesting to take in what others are sharing. I have dismissed a lot of ideas that have turned out to be great successes, both financially and evolutionary. I, for instance, didn't see why Ethereum would grow at all to begin with, why it wouldn't be built as a second layer on Bitcoin. I was wrong there. I thought Lightning, the scaling solution for Bitcoin, would have come much further. I was wrong there. So I've been wrong a lot, and that's exciting and just makes me more eager to learn even more and keep an open mind going forward.
Continue to learn and be enthusiastic and explore more.
Yes.
Thank you very much for being with us. And if you have any comments, we would like to put you below the video and would be eager to answer to them. Thank you very much and see you on next video, and thank you.
Thank you.